Well, good day, everyone. Kyla Kun, Dobry din. It's a pleasure to welcome you today to this BKS Oil, Gas and Renewables webinar with the subject of small and medium Kazakh and foreign E&P companies, investment climate and activity levels. We have both a great panel and moderator who are all very close to this subject. And just interestingly enough, today, those people are stretched over 12 hours time difference. So if you can watch their activity, you may guess which one had to get up very, very early this morning. Anyway, for housekeeping items, the webinar will be video recorded and available on the BKS website after the event. A language channel button is present at the base of your screen. You can choose Russian or English. And there is a Q&A feature also at the base of your screen for posing questions to the moderator and the panel. Now, as always, it's a pleasure to welcome your moderator today, Nick Coleman. Nick is Senior Editor, Oil News, which is part of SB Global Commodity Insights. He knows the region very well, having lived and worked in Almaty, Minsk, Moscow, and Riga, predominantly working on energy issues in those areas. So, over to you, Nick.
Thank you, David. It's lovely to be here, and thank you for all of you who have tuned in to listen to this event, which I'm really looking forward to hosting for you. I first visited the Tengiz oil field in 2004, and also visited around the same time a place called Bautino, which was the supply base for the Kashagan oil field. So I've certainly taken an interest in the region for a very long time, more than 20 years. But today we have three experts joining us from different parts of the world with, I hope, complementary perspectives. Malcolm Forbes Cable will be speaking first. He's in Edinburgh, but he represents Wood Mackenzie, a highly respected organization. Jama Nusebe from Ramla Capital, who has been investing in a field development in northwest Kazakhstan, which he's going to tell you about. I think a long experience there and with a few ups and downs along the way. So it's going to be a really interesting story from Jama. And then Temirlan Aimagambetov, Director of the International Department of KAZENERGY. So KAZENERGY, in case you're not aware, is the industry association for Kazakhstan and a kind of communications channel between, I dare say, between the authorities and the industry, and an organization that tries to bring greater knowledge to the public about the oil and gas energy industry in Kazakhstan. Personally, I was last in Astana just 3 weeks ago. I think I first went there in 2003, and it's had quite a transformation in that time. And of course, Kazakhstan is in a real growth phase for oil production at the moment. The Tengiz field is producing, or has been producing in the last few weeks, nearly 1 million barrels a day of oil after a really massive expansion project by the operating consortium there. Potentially there's more oil to come, more growth to come from the Kashagan field, although that is, with some complications. 2 weeks ago, though, I was actually in Baku in Azerbaijan, which is in a different phase, with the core oil asset, ACG, actually in decline. I don't know if you can see the slides that I have presented on your screen. I'm not going to take up too much time, before we move to the experts here. But it's an interesting contrast between Kazakhstan and Azerbaijan, with Azerbaijan facing oil production decline and now having to be really resourceful and entrepreneurial to try and attract new investment and find ways of extending and boosting the asset base that it has there. So actually at the Baku Energy Forum a couple of weeks ago, Azerbaijan signed some agreements on exploration with ExxonMobil that was devoted to the possible unconventional oil and gas potential that may still lie onshore in Azerbaijan, and also another separate agreement with another company which is much less well known, I think, Gran Tierra Energy, a Canadian company with activity in Ecuador and Colombia, working on complex geologies there in the exploration space. So I thought there was an interesting contrast seeing how Azerbaijan is trying to address the decline issue it has and trying to build a new asset base, perhaps find some new resources and see what's possible. Before I hand over, there are a couple of slides here presented, actually lent to me by a colleague of mine at S&P Global in our research department, Ian Conway. Some of you may know him. And in the slide here, he highlights a couple of things on the map of Kazakhstan that you can see there. Firstly, it's the world-class quality of the pre-Caspian basin, home to Kashagan and Tengiz, with fantastically thick sediments bearing hydrocarbons. Again, I'm not a geologist, but the point here is that there may well be more to find there with up-to-date technology. But the map also shows that there are a lot of areas of Kazakhstan which are really underexplored, especially further inland onshore in the center and slightly further east in the country, which are really still considered in the early days of exploration. One other thing the map shows looks at is salt, the presence of these thick salt layers. And the question that the map is posing and that my colleagues are posing is, what is that salt hiding? And has it really been examined properly, this question? Has the latest technology been applied, especially seismic technology? And that's the same question actually for Azerbaijan, interestingly. The seismic technology has moved on a great deal, and has it really been applied sufficiently yet in Kazakhstan? Perhaps that's something our various speakers might like to address at some point during this presentation. So it's his slide here is about bringing to bear the latest technological methods. And if you go to the next slide, Alijan, if you don't mind, you can just see there a sort of summary of question marks, which I think still exist for the Kazakhstan oil and gas industry. So I'm not going to go into really any more detail there. And I think we're going to move straight to our first speaker, Malcolm Forbes Cable. Malcolm is Vice President of Energy at Wood Mackenzie. He has enormous expertise and experience in the region. And I believe that he is going to be talking a little bit more on the gas side than the oil, but you can correct me if I'm wrong there, Malcolm. But it's a timely topic because, of course, Kazakhstan right now is trying to boost its gas processing capacity and, of course, develop the infrastructure to distribute the gas to the market in Kazakhstan to meet the domestic demand and help to support domestic businesses and industries, which might sound uncontroversial, but there have been some advisors, I think, of Kazakhstan who perhaps have suggested that the way to go is renewables and the energy transition. So I'm sure Malcolm will be looking at some of these topics. Malcolm, would you like to go ahead?
Yeah, thank you very much, Nick, and very kind intro, very interesting intro. And yeah, just a thank you to British-Kazakh Society, and particularly David, for getting me involved. Probably like herding cats, I expect, David, and also Fergus, who I've got to know over the last couple of years. It's been great. I know hopefully Fergus has tuned in from Aberdeen. Anyway, I'm sitting in sunny Edinburgh, a long way from Kazakhstan. And one fact I like to tell my children when I'm going to Kazakhstan is that Scotland is about, you could fit Scotland within Kazakhstan about 44 times. And it has a curious place in my heart, Kazakhstan, so I'm very excited to be talking to you all today. And just before we sort of go on to the slides, I wanted to pick up on something that Nick was talking about, and the bit that really gets me motivated or gets me very excited about Kazakhstan and the wider Caspian area. You know, the last 5 years or more have been consumed very much in and around energy transition, and the idea that oil or hydrocarbon demand is peaking, we're going into renewables. And I think a lot of people had assumed a quicker transition than we're actually seeing. There's all sorts of reasons for that, but also I think some of it at the initial phases of talking about energy transition and politicians setting targets, net zero targets, I think there were some fundamental misunderstandings about the energy system, the complexity, the capital requirements. And so what I see for Kazakhstan, because you'll often look at it with people and they go, but you know, oil's past, we're moving into renewables, and it's like, no. Oil is going to be required for a very long time. We may peak in the next 5-10 years, let's see, but that's still over 100 million barrels of oil a day. We continue to see gas demand growing, and I fundamentally believe Kazakhstan has a huge role to play in that, and indeed, you know, around the Caspian Basin. So that's why I find the region fascinating. And the subject today is equally interesting because, you know, we're going to see some charts, and we've got some pretty basic charts, pretty obvious charts, but it's more about setting the scene, which show the dominance of the mega projects. And you go, well, that's just the way it is in Kazakhstan. But I think, as Nick has highlighted, there's so much more to play for here. And I think that the tail, the long tail, the mid-size to the small size E&Ps are compromised in terms of being able to sort of, let's say, unleash the animal spirit of the small E&Ps and get after exploration, monetize assets, provide gas to the domestic industry, and, you know, increase exports, increase revenues for Kazakhstan. So with that very long-winded introduction, have we got a slide? I think I shared some slides quite late. I don't know whether we've got any slides, Alex. Oh, great. Okay, so if we just jump straight to the first slide, I think I've set the scene. So just thinking about, you know, as I say, some simple slides here, and hopefully most people are very familiar with this. But if you know, look at Kazakhstan's E&P sector and split it by operating company size, we'll get onto that in a minute, how have we categorized. But if you look at this, it's a pretty striking picture. So you've obviously got the mega projects, which are all household names, globally famous fields. And this accounts for about 70% of the combined production. So this is barrels of oil equivalent. So this is oil and this is gas. And I think if you look at that as about, on current basis, is about 1.8 million of liquids production, and you know, the rest is gas production. This is sales gas. This is not produced gas, because obviously there's huge amounts of reinjection, particularly on the mega projects. But if you look at this, 70% of production is the mega projects. If you then take into account the large projects, you then talk about 90%. So you've got this heavily skewed production picture. Now, this is not unusual, and indeed, if you wanted to sort of contrast it, you could say, well, look at Qatar. You know, Qatar with the North Field. I don't know what the dominance of the Qatar production is, but it's over 90% of, I suspect it's sort of 80–90% of total production. You look at Bahrain, it's one field. So we do see this elsewhere, but the difference is, coming back to my point about, Kazakhstan, its size, and Nick's point about sedimentary basins, what else is there? And is the country enabling companies like Jamal? Is he being supported to explore, to develop? Are we removing barriers from people investing in the country? So this is a pretty stark picture, I think, for somewhere that has such enormous potential beyond the pre-Caspian basin. So we go to the next slide and look at this split. So if we think about this breakdown, so just trying to sort of quantify again. So if we think that 18% of the operating companies, so this is done on an operating company basis, produce 95% of the production. That makes you wonder, well, what on earth are the rest of them doing, and what's happening down at the tail end of the E&P sector? Why are these companies? Why are we not seeing more companies stepping up, being able to grow? Put it another way, 3% of the operating companies produce 70%. So that's the mega project. So that's even more stark. But if you think about some of the challenges, and the next slide will look at this in a little more detail, but if you think about the sort of middle order here, so large to medium, we're all very familiar with the significant timelines, and that continues to be a challenge, obviously, for Kazakhstan. And then also in and around high impact exploration, as we've just been speaking about, there's significant potential there, but actually allowing people to explore, allowing people to invest, there's a lot of things that can be done to support that. So if we think about the sort of lower end, the sort of what I call the tail, a lot of these companies, as my colleagues Craig and Andre will tell me, are stuck in what we would call purgatory. So they're stuck in trial production. They're trying to step up, but that's just not happening. We're also seeing companies commercially compromised because of the domestic oil obligations, and also domestic gas prices. So if you just think of sort of classic levers for how companies can grow and companies can make a return, so they want to invest more, a lot of those routes are challenging for the lower end of the market, or the tail of the market. So Nick, if we go, or Alexander, if we go to the next slide. And I think one of the ways to sort of think about it, the way I sort of think about it in my mind, is go, okay, well, we've got a sort of an elite bunch of fields here. We've got the mega fields. Let's contrast them with the smaller fields and just think about what are the differences that we're seeing, and that might help us identify some of the potential solutions. So if we think about access to exports, CPC, well-known, accessed by the mega projects. Whereas if we think at the smaller end of the scale, it's much more challenging. There's much fewer options. So there's definitely something to be thought about there for exports. Realized oil price, something I mentioned before. So the discount selling into the domestic market, the discount that companies have on the oil price that they realize is significant. International prices for the mega projects, and then for the domestic players selling into the local refineries, obviously a significant discount to Brent. Big one is around access to gas infrastructure, and hopefully Jamal will be talking a bit more about this, but just thinking about the strict controls on associated gas, strict controls on emissions, and the ability for companies to access third-party infrastructure. Now, I was chatting with a colleague earlier from Norway saying, what's the magic sauce in Norway that allows people to access? He says, I'm not actually aware of any magic sauce. It just makes economic sense. So you do wonder why it seems such a challenge in Kazakhstan to access third-party gas infrastructure. The timelines are really long, and it's very, very painful. And if you're having to build your own gas infrastructure, and you're then realizing a very low price for that gas, it's commercially problematic. And then the realized gas price. Final one I would say is around access to supply chain. This is where domestic or the smaller end, I would say, are more advantaged because there's a significant domestic supply chain. Whereas I think some of the sort of more rarefied, higher, more technically challenging operations of the mega projects and the sort of pre-salt plays, yeah, you're bringing in a lot of materials from abroad. So that's, creates a huge expense. So on that side, domestic maybe has more advantage. But overall, you can see the sort of the playing field is tilted, obviously, towards the bigger players. And so it's a question of how do you unlock some of the opportunities and how do you unlock the desire for investment, because there's clearly a desire to invest in Kazakhstan. And if you think of it from a sort of national strategic perspective, what's not to like about more oil and more gas production? So I think we got one more slide, and then I'll wrap up. So just thinking about what are the levers that we could think about, and each one of these is probably worth a presentation in itself. But this idea about better access to gas processing infrastructure. If you're trying to develop a field that has associated gas and you're committed to managing that gas, if you have to build those facilities yourself, it's clearly in many cases prohibitive, and it really kills the economics of the project. So trying to set up some kind of mechanism or regulation that encourages the sharing of gas infrastructure, allowing people to tie into gas infrastructure, would be one positive step. Now, the big issue around commodity prices, this is very obvious to anyone looking at any kind of development. What are the prices I'm going to realize? Now, you've got a bit of a contradiction, obviously, in Kazakhstan, which is in desperate need of increasing its gas supply. But for domestic producers, producing gas, the realized domestic gas prices, either for associated or for gas field productions, make the economics very challenging indeed. So trying to figure out some way to access higher gas prices would clearly be highly beneficial to developments in Kazakhstan. And then finally, there's a point around access to exports. So if you think about the volume of oil exports that go through CPC, dominates the liquids exports, there's clearly strategic risks that exist because of that. Are there opportunities to ease that, to provide other export capacity? Clearly, the Caspian, shipping across the Caspian, there's efforts to increase that. But should there be more focus on that? Are there opportunities to find new export routes? But if we find new export routes, would there be access to some of the smaller players so they could access higher international prices? So that's all I've got, Nick. I mean, it's pretty simple stuff, but it was just trying to sort of set the scene and hopefully help everybody understand what the situation is in Kazakhstan.
Thanks, Malcolm. That's a really nice introduction. Your presentation raises in my mind one topic, which is an improved model contract, I think. Was introduced in 2023, and we might come back to that perhaps with Temirlan as well, or not, wins companies. But equally, it might be good to move on actually to hear an account from the coalface, as it were, to sort of get a little bit more into the nitty-gritty of what it's like to run an E&P company in Kazakhstan from Jamal Nusibay. I'm really happy to have you joining us, and we'll appreciate you're basically up and at 3 in the morning, having traveled great distances across the Atlantic. So thank you for joining us, Jamal. Let's hear your presentation, please.
Thank you, Nick. And thanks, David and Alijan and British-Kazakh Society for asking me. And thank you, Malcolm, actually, for that setup, because you made me think about other things that I'm now going to answer as well, or at least you reminded me of periods dealing with things like the Salt Dome, Nick, which go back in our history. So let me tell you a little bit about who we are and where we are and maybe why we are. So my name is Jamal Nasabi, and we've been with my company Ramla managing and investing in these types of projects for a while. I actually first went out to Kazakhstan not quite as long ago as you, Nick, but 2007, 2008 to look at projects back then. And we first began to work in Kazakhstan on this project actually around maybe 2014. So it's been just over 10 years. And we took over this project when it was early production, although the field that we now are looking at and that we talk about is in northwestern Kazakhstan. It's in the middle of the Pre-Caspian Basin on your map. And it was a Soviet field. It had been explored in Soviet times. It had a couple of wells drilled with some very old seismic. And I think this was kind of a classic scenario for a lot of the projects that were available in Kazakhstan in those days that had data from the 60s that hadn't really been worked on much since. Now, since we got involved, we've been through various what they call work programs, which are the ministry requirements to maintain your exploration license, and hopefully then get to a point where if you find anything, you move into development and production. So we obviously now 10 years later, we've been through a number of work programs, but actually we found that we ended up spending rather more than the work programs required, which is slightly unexpected. I think many companies would try to sort of minimize their spending. We did try to minimize our spending, but we also wanted to maximize our output. And therefore, we ended up not just looking at it in terms of, well, we've got to spend this in order to maintain our contract or our license, but actually working with outside experts, a number of companies that you would recognize, to get the best possible results. I was fortunate in the sort of early to middle years to be working with a colleague of mine who had also spent time in Kazakhstan, called Hillman, who had been for a while in KMG and before that with many other companies. I am not an oil man. I'm a lawyer. So, all of this was, I understand the technicalities. I understand contracts. And now I understand rather more about geology than I ever did. But the process that we went through was not without its challenges. So what were the challenges that we faced as a small independent company trying to do this in Kazakhstan, in the middle of nowhere in Kazakhstan? So the first thing I would say is that we are quite far away from anything that is being done in Kazakhstan, because the middle of the Pre-Caspian Basin is actually a very interesting place geologically, but it is not an interesting place from an infrastructure perspective. Malcolm, you mentioned the infrastructure question. We are a long way from gas pipelines. We're a long way from roads. We have some roads and so on. So one of the biggest challenges we have now is, well, what is it that a company like us can do to ensure that its production ends up being part of a Kazakh national development. And the infrastructure that we were looking at, and to give you an example, as we work towards the production of our gas, and now we're on the verge of, well, on the verge, we are now working out what to do with our gas production. And we have various options. We could go for pipeline. We could go for some other form of gas development, petrochemicals, methanol, ammonia, etc. We could go for LNG, or we could go for some kind of local power plant. All of these are infrastructure investments. And the infrastructure, because even if you're talking about a power plant, you have to put the infrastructure of the power plant in, and you have to put in the wiring. And thus far, we haven't actually seen any legislation on the Kazakh side that would help us in taking an investment decision, both in terms of protecting the investment that might be made, but also in terms of guiding us or supporting us in that decision. So let's say Kazakhstan would like the gas production to enter its national gas production numbers. Wants to put it into its national pipeline grid. How are we going to get it there if Kazakh Gas, with whom we have been talking for a couple of years, isn't actually interested in working with us to provide a pipeline? And if we do build the pipeline ourselves, how are we actually going to get that money back? Sorry, I just jumped into the infrastructure point because I wanted to answer it. But in other projects where we work actually with gas infrastructure, the laws often provide for some kind of tariffs which structure the return of investments into that kind of infrastructure. Obviously, Kazakhstan doesn't have anything like that. I mean, you have a single infrastructure provider, and that is Kazakh Gas. The quantity of gas that we have means that actually we are able to decide to do any of this ourselves. But in order to get to the final investment decision for that, we need stability and clarity in the laws. And thus far, we see a lot of talk at the strategic level. We see a lot of political will. But in our interactions with the government and the bureaucracy, we have found that it tends to be quite stodgy. And I don't know if you guys have had to deal with ministry bureaucracies yourselves, but one of the things that we found is that the political will isn't quite translating into sort of agile, quick responses from professionals in the ministry that would really like to get this going. I think that my understanding is that their structures are still very much based on an understanding of the oil and gas industry as being an oil industry. And the idea of having independent gas producers is still new. And when we actually discovered that we were a gas field and not an oil field, one of the things that was actually difficult was to convince people, even in our company, in our environs, that gas was a good thing, that we were actually able to commercialize this gas because being a gas field means that you fall under a section of the subsoil law that allows you to export it, as opposed to selling it only to the domestic market. Until that point, everybody that we had spoken to in Kazakhstan said, "Oh my God, gas, it's a disaster. You're just going to have to walk away." We argued and pushed, and I think we are now basically the only, or maybe the only one of two pure gas producers in Kazakhstan. There are not many fields that have focused on the production of gas in Kazakhstan. And that's because I think of those two things, meaning a perception that gas was never going to make money because of the domestic subsidized market prices, and maybe a dominance of the market in the past, certainly up to a couple of years ago, by a couple of players. So it was very hard to break in. Now, under the subsoil law, a gas producer, meaning not a producer of oil and gas, but a company that only produces gas, has the right to export that gas, meaning that we can get export prices. But how are we going to do that without the infrastructure? In discussions with Kazakh Gas, and what we've heard from the ministry is there is an export price. And you, I think, mentioned that, Malcolm, also in one of your points. There are export, or someone did, maybe an export formula. Anyway, there is theoretically a formula for exporting gas, which we could sell to Kazakh Gas, but we're not 100% sure what it is. And it still is actually quite a significant discount of the potential price that we could get if we did it ourselves. So as we go through this, I mean, I've jumped around because I answered the points in this order. But in the 10 years since we've been there, or 11 years, the work that we did to update the information, to bring in good Western analysis, I mean, we redid the entire seismic, 2D, 3D, we drilled wells. I should probably say we have 3 producing wells at the moment with flows of up to 900,000 cubic meters per day. And we are looking to produce about 400 million cubic meters per annum, more or less. So those are the numbers that we're talking about after all this time. To get there, the investments that we had to make were basically equivalent to what you would have to do to find oil. But the understanding from the, I think, ministry side and the bureaucracy side was not there, meaning that they looked at this as, again, gas being normally an additional item, a side item, associated gas, which people just subsidize to the market. So one of the big hills we've had to climb is to try to convince or to help people understand that if you want to increase gas production in Kazakhstan, you have to understand that people are going to invest the same amount as in oil, but they're going to be much more locked in afterwards due to their need to commercialize it, which oil doesn't have. And I'm sure, Malcolm, you've worked on things like resources and reserves reports. I mean, Wood Mackenzie tends to be known for these things. You know how with an oil discovery, you have oil and then it becomes your reserves. With a gas discovery, you have to have a full and realistic commercialization plan. And it's very hard to have that if you don't know whether Kazakh Gas is ever going to build a pipeline that passes near you, or whether the railway lines are going to be expanded or extended in your direction, and who to work with on, and whether if you do put in this money, what kind of protection, because then you're going to have to build that infrastructure yourself, what kind of protection you're going to have for that infrastructure. What really matters, I think, is that for a small company, you need stability of law. You need to know that your investments are going to be protected. And you need to know that if you do find this gas in this case, that the government is going to be on your side helping you to get that to market. Why? Because it's in the interest of Kazakhstan. I mean, they want to develop their gas production. But it's also, in our case, we view it as a transition fuel. So it is also in the interest of them to help us or to support us or to have our back, because I guess that's how you get more people to come and invest in Kazakhstan. We are happy to be in Kazakhstan. We're looking forward to being able to get our product to market, and we can talk more about that later, but that's, I think, all I want to say now.
Thanks, Jamal. It's really nice to have this case study, if you like, and I just wanted one quick question. Maybe I missed it, but what are you're producing 900,000 cubic meters at the moment per day.
We're not in production yet. So
Uh-huh.
these are the production flows that we have found.
Yeah.
And we have a plan to produce, I mean, we to produce 400 million cubic meters per year.
Okay.
That's our sort of production profile going forward.
But at the moment, it's shut in effectively.
At the moment, it is shut in. And as I say, one of the things that we are trying to work out is what is the best means of taking this product to market.
Okay.
I mean, one could, for instance, have a power plant to create a data center, and then the gas just goes into power and stays in a closed loop, which is possible.
Thank you so much for your presentation, and we may well have some follow-up questions. But I want to move to Temirlan Aimagambetov, who it's really great to have you. I think you're in Astana at the moment, and you're KAZENERGY. KAZENERGY, I should say, KAZENERGY is the industry association, and my own company sometimes, has worked with KAZENERGY on producing various reports. So, and maybe you'll be touching on some of the topics we've already raised, but Temirlan, let's hear your perspective, please, and welcome to this webinar.
Yes, thank you, Nick. Thank you, British-Kazakh Society, for this opportunity to speak today, to deliver the view of KAZENERGY on today's relevant topic. Yes, Liran, next slide, please. Located at the heart of Eurasia, Kazakhstan enjoys a unique geographic position that makes it a key player on the international stage. The country ranks among the global top 10 in reserves of various minerals. Given global trends towards low carbon development and the adoption of renewable energy projects, Kazakhstan is creating favorable conditions for market entry, not only for large corporations, but also for small and medium-sized enterprises. This opens up new horizons for SMEs, promoting their integration into the national economy. Next slide, please. According to the National Bank of Kazakhstan, in 2024, the country attracted $17.2 billion in new projects, making it one of the regional leaders in terms of investment volumes in Northern and Central Asia. Kazakhstan's strong investment appeal is driven by stable macroeconomic policies, a favorable business climate, and robust government support. Recent years confirm a steady flow of foreign investment interest, creating opportunities for both large corporations and SMEs. Next slide, please. In recent years, the Netherlands and the United States have become the top investors in Kazakhstan. Switzerland and Belgium invest in metallurgy and processing industries, while Russia channels capital into the oil, gas, and banking sectors. China, in turn, is active in uranium mining, oil and gas fields, and infrastructure projects. South Korea, France, the United Kingdom, and Germany are also active investors in manufacturing, energy, transport, and high-tech industries. These investments create opportunities for SMEs to become reliable partners to large international companies. Next slide, please. Small and medium-sized enterprises play a vital role in Kazakhstan's attractive sector by ensuring stable supply chains for large companies. They are actively involved in import substitution, development of small deposits, and help reduce unemployment in the regions by creating new jobs. Moreover, SMEs often offer innovative solutions and technologies, making them important players in the modernization and efficiency enhancement of large enterprises. Next slide, please. This slide presents a SWOT analysis that assesses the strengths, weaknesses, opportunities, and threats for SMEs in my country. Strengths: access to natural resources, government support, growing interest from foreign investors. Weaknesses: limited access to finance and insufficient capacity for scaling up. Opportunities: growing demand for local partners, development of new technologies, and continued state support. Threats: competition with major players and the need to adapt to changing market conditions. It is important to view the weaknesses and threats as challenges that can be overcome and transformed into competitive advantages. Next slide, please. Investment opportunities for SMEs in Kazakhstan are considerable. As the demand for local partners grows, large international operators are increasingly seeking reliable Kazakhstani contractors in areas such as green technologies, production digitalization, maintenance and repair services, logistics, catering, and occupational safety. Kazakhstan's industrialization policy includes the development of local raw material processing, which increases demand for small-scale processing plants, engineering solutions, and ESG consulting. This creates new opportunities for SMEs. Next slide, please. An analysis of the advantages and disadvantages of SME development in Kazakhstan reveals numerous growth opportunities. Strengths include a strong resource base and government support, while challenges involve limited financing and a need for workforce upskilling. These factors create the basis for further development and modernization of the sector and enhance the competitiveness of Kazakhstani's SMEs. Next slide, please. This slide outlines the segmentation of SME within the extractive sector and related industries. We can observe differences between domestic SMEs and junior companies in terms of specialization, size, and technological maturity. This information helps identify the most promising investment and development segments, as well as opportunities for partnerships and collaboration. Next slide, please. Recommendations for improving Kazakhstan's investment climate were developed both for government agencies and for investors themselves. Dear colleagues, I would like to emphasize that an investment headquarters has been established in Kazakhstan on the instruction of the state. Its mission is to promptly review investment projects, support investors, and remove obstacles and barriers in the creation of a favorable investment environment. These measures aim to build a stable and attractive environment for the development of SMEs and to encourage investment in the extractive sector, ultimately contributing to the country's economic growth. In conclusion, small and medium-sized businesses in Kazakhstan have all the prerequisites for successful development amid growing investment attractiveness in the extractive sector. With support from the government and international partners, SMEs can secure a key role in the national economy, contributing to its diversification and sustainable development. Thank you.
Thank you, Temirlan. That's a great overview, and we are going to have some time, I think, for audience members to ask questions. It would be nice to, also ask about the kind of a bit more about the advantages actually of being a smaller company. Presumably, that there must be advantages as well as disadvantages, and Temirlan has already spoken about this. I think agility might be one. I'm wondering about Jamal and your company and how you have been so patient, and perhaps more importantly, how your investors have been so patient. You must have some sort of patient investors able to kind of to wait essentially while you resolve some of these logistical issues that you've described. And Malcolm, you might have some perspectives also on what advantages the smaller companies in this segment might have. I can think of one company. I don't really want to sort of name names because these people are not here presenting, but I know of one company in Kazakhstan, which is a smallish, medium-sized upstream producer, but it also has made some big infrastructure investments in gas processing capacity, which it's been successful in selling to other upstream users. In other words, providing infrastructure to other companies, and it's been a process of adaptation and perhaps not doing what you originally intended to do entirely. Anybody like to sort of talk a little bit more about the adaptive power of smaller companies and how you can survive essentially, even if things don't necessarily go your way or the way it was originally intended?
I can perhaps just answer that on a broader point, because I'm seeing I'm interested in others' thoughts, but we're seeing this elsewhere in the world, and I've just been doing some work with a company, and we were thinking about what's their advantage, what's their sort of competitive advantage, what's their strengths. And the one that we kept coming back to, and this is thinking about companies, we've seen a lot of JVs, larger companies coming together, forming a JV. We've seen them all over the world. And you're like, well, why are they doing that? Now, there's all sorts of financial reasons why you might create a JV. But I think for the larger companies that have, significant overhead, significant costs, a lot of bureaucracy, creating a smaller entity provides a sort of nimbleness and a quicker decision making that is definitely advantageous, because often you'll see decisions going back to wherever the host country is. There's delays, there's the board meeting, all these kind of things that create delays. But obviously, if you create a smaller entity, you do create something that's much more fleet of foot, that can make decisions more quickly, as I'm sure Jamal will talk about. So just on a sort of broader topic, I see that trend in the oil and gas sector for companies trying to set up and get after things more quickly. Now, whether that's the case in Kazakhstan, because as we've discussed, there's many challenges, I think it's still something that's worth reflecting on.
Yes, I don't know if other panelists would like to come back on that. We do have I'll just throw in a question which has come up on the Q&A from the audience, just for you to also be thinking about at the back of your minds. LNG and whether LNG is a practical thing to do at a landlocked, perhaps quite isolated upstream operation in Kazakhstan, such as yours, Jamal. Most of us think of LNG as a commodity that is a commodity of the high seas, but we also know that LNG is used in trucking in China, for example, and in the United States. So just wondering about the potential of LNG. But Jamal, did you want to come back at all on the first question about the sort of the patience of your investors and how you sort of have managed to adapt to adversity, perhaps?
Well, I'll say maybe actually I can answer all of them in the same run. So let me say that flexibility is definitely crucial, and I think that for any actually that would apply anyway to an exploration company, because you have to adapt and react to the geology that you're exploring. You may think that you have something, you drilled, you find nothing, or vice versa. You may have to modify your plans, modify which section of the block you're drilling. So you have to be flexible. And if you end up finding gas instead of oil, or oil instead of gas, then you're going to also have to alter your direction. So I think flexibility is key. And therefore being small maybe helps with that. Being small means that we were able to operate kind of nose to grindstone, heads down, without sticking our heads above the parapet for the last few years. And I think that also helped us, because we weren't necessarily in anybody's sight, and that we're just doing our job a long way away, and that was fine. But then the third thing is that it's also a disadvantage, I think, because when you're talking about where we are now, then we end up facing, I think, the kind of challenges that a larger major would not face in terms of discussing, how we could work with the government to get infrastructure in place and these kinds of things, or whether or not we could access the Central Asia Center pipeline and what that would take. We end up being disadvantaged by the fact that we're just a small producer and not Exxon or Total. Mm-hmm. So we're aware of that. The patience, yes. I think that, again, by its nature, this type of project requires patience. But I also would say that this kind of project is one where you probably end up getting different financing for exploration than for production. And so we are at a stage where we are financing the production, or will finance the production differently. And then the third point was LNG. And I think that's part of the flexibility. So we talked about the potential outputs or commercialization options for the gas. We are stranded, and I saw the question in the Q&A. I mean, it is considered a stranded field, although it could not be, because there is a gas pipeline project that actually is supposed to come up to us. It's just taking a while. One of the questions we have, and this is where the government side comes in, is, okay, so let's say we decide that we're going to put it into the pipeline, and the pipeline is supposed to arrive by next year, which is when our deadline is, let's assume. But then the pipeline is delayed. And then we go to the government and we say, well, we are ready, we've done our bit, but it's your pipeline or Kazakh gas pipeline that's delayed. Does that mean that we're not going to be in trouble with you at the ministry, or are you going to then start? And this is where certainly our local CEO and so on, they're all extremely nervous, because their interaction with the government is that the bureaucracy is strict. And so there's little understanding of the complications that go into this, or of the flexibility that's going to be required then to deal with delays on the other side. LNG is an option that we are very seriously looking into. I would say that it's our actually primary option at the moment. And we think it's a very realistic option, yes.
Right, thank you for that. Temirlan, is there anything you want to add? I'm conscious we don't have Kazakh gas here present with us, which feels slightly unfair on them, because I'm sure that they are in the midst of all kinds of interesting projects and would have a point of view of their own. But Temirlan, any thoughts on this broader question of sort of how you monetize perhaps a more disadvantaged asset? If not, then we might move on to...
I will pass your question to Kazakhstan.
Sorry, I thought you were shaking your head there.
Yes.
Well, do go ahead, sorry.
Yes, I will pass your question to Kazakhstan.
Oh, I see.
They are proud members of our association, and we get to you with their...
Yeah, and on the LNG side of things, clearly it's pretty early days for Kazakhstan, but I think other countries in the world have shown that it is possible to do interesting things with LNG in the transportation sector. We are running out of time. I wanted to actually ask some broader questions to any of the panelists. We may have some people on this webinar who are early in their careers, and it is possible to be quite gloomy about a career in energy. But I wonder if you think this is a worthwhile and interesting career, if you were thinking about advising perhaps younger people early in their career in Kazakhstan, looking at going into this industry, is it, or in Scotland, in Edinburgh, where you are, Malcolm, what are the, is this still an interesting industry to be in? And is it something that you'd encourage, younger people in Kazakhstan or elsewhere to pursue?
Yeah, I can talk. Shame we've only got a couple of minutes. I can talk for hours on this, because I'm incredibly passionate about the energy sector, and I don't think there's ever been a more interesting time in the energy business. If you think about how it's evolving, how rapidly it's evolving, and how we're shifting from a very hydrocarbon-based system to a much more diversified, integrated energy system, it's going to require all the cleverness and all the expertise and all the energy, I'm talking about individual energy, to make that happen. So in terms of a career, I think it's an amazing opportunity. And okay, you may decide I don't want to be in hydrocarbons, but remember, hydrocarbons are going to be the greatest proportion of energy provision for many decades yet. And you may want to go into the low carbon sector and provide some of the solutions and some of the thinkings there. But all in all, it's a fascinating, dynamic, international, and I think an awesome industry to be in. I'm biased because I've been in it for 30 years, but yeah, I would encourage anyone to get involved. Absolutely.
Even in Scotland, where
Well, we got lots of offshore wind, Nick.
right. I mean,
oil production, gas production is declining, but yeah.
I mean, there is a question that's just popped up in the Q&A about which is making some assumptions about LNG and how you would need to export LNG, I think, across the Caspian with sort of liquefaction and then regasification on the other side of the terminal. And these are the kind of logistical obstacles which the oil industry is also thinking about. You know, when we talk about diversifying export routes, there are the sort of physical challenges right there of how you get oil out of the Caspian region to international markets. But is that is that a correct assumption? And you know, are there alternatives? Because Malcolm has just talked, and I think it's a really important point. Malcolm's talked about the need to kind of rethink things and do things a little bit differently sometimes and look for alternative solutions. What's your thoughts on this, Jamal?
No, I mean, absolutely. First, I'd say yes, it is an exciting industry to be in, especially if you're looking at I think for me, gas is a transition fuel. I think especially in Kazakhstan, there is obviously an enormous amount of gas and a lot of work to be done. And gas is a much cleaner form of energy than coal and other forms that are being used currently. So I think that it has a large role to play in the Kazakhstani transition to cleaner energy. So getting involved in that is not a bad thing. And we're excited to be there, by the way. I'm not, if I was negative about some of the things, it's because I was training some of the challenges, but that doesn't mean that we're not super excited to be where we are and happy to have been able to go through that. And I would say that the professionals that we've worked with in Kazakhstan, including our CEO and his team, have been fantastic. I mean, and you don't necessarily find that everywhere. So it is great that there is this type of professionalism already in Kazakhstan, and I think that, you know, I hope long may it last. On the LNG terminal, possibly, but there's actually a lot of talk in Kazakhstan now around and about LNG. There's another company I know that we've another smaller company that is working on also developing LNG and possibly using LNG as fuel. I know that they were discussing that at sort of higher level, also politically, of maybe using LNG as a fuel for trains and things like this. So there's a lot of discussion around LNG, and as we reach out to LNG companies that produce the infrastructure and the technology, I'm well aware that we're not the only Kazakhstani company that is actually speaking to them. So there is movement in that direction, and who knows? We'll see.
Yeah. I think patience is definitely a virtue in this situation, but I think also, you know, different ways of thinking about problems and finding alternative solutions, you know, is also, you know, one of the key messages, hopefully, of this whole webinar, that there are different ways to crack a nut, and if you've got a seemingly intractable problem, whether it's geographical or regulatory, you know, there may be alternative ways around. Thanks very much, everybody, for joining us. Thank you to our audience. I think we've had a pretty good turnout for this event. Really interesting topics to discuss, and I'll turn it back to David for a few closing words. Thank you very much, David.
Thank you. Well, I just obviously like to thank our excellent moderator, Nick, all of the panel, Malcolm, Jamal, and Temirlan for participating today, and also who you don't see, Alijan, for his management of the webinar today, sitting in Astana, and Aida interpreting in Almaty. Just very briefly on future events. In the energy sector, we have planning a second webinar this year on nuclear power issues in Kazakhstan, which of course is a very important topic worldwide, and especially in Kazakhstan at the moment. Also, another webinar on a little bit later on decarbonization across the energy sector. So please visit the website, see the further details of events coming up. Also, think about membership if you're not already. So thank you all for attending today. Looking forward to seeing you at the next event. Keep safe. Take care. Bye now.
Everyone. Thank you.